Here's a guy that was planning on retiring January 1st, 2008. And because the markets crashed on him, he couldn't retire anymore.
Nope.
He ended up not being able to retire until January of 2013.
Wow.
It was like a 5-year stretch for him. Don't be that guy. Don't be George, right? So here's the question. You worked your whole life. Your 401k values, probably at the highest level they've ever been. What is your plan? Do you have a plan to protect those values?
George didn't have a plan.
Yeah, he thought he did. He didn't.
Welcome back to Retirement Today. I'm your co-host, Zach Holcomb, and next to me we have Michael Reese. He's a certified financial planner, retirement planning expert, and president and founder of Centennial Advisors, headquartered right here in Austin, Texas. Mike, today's show has been great so far. We're talking all about the retirement questions that you absolutely have to say yes to.
That's exactly right. So we've talked about income. How are you going to replace, do you have a plan to replace your paycheck in retirement? And remember, what do we say? Hope is not a plan.
Right.
The second one is, do you know why your taxes might be higher in retirement than when you're working? And, we talked about that. That one gets me all going. So I'm still a little, I had to go take a quick drink of water there between, while we were on break because, of course, I was all, hot and bothered from taxes.
Yep.
I hate taxes. All right. So let's move on to question number 3. So here's a question. Go ahead, Zach. What's our question?
Talking about investments. Do you have a plan to protect yourself from downside risk when you retire?
Yeah, this is a great one. So think about this. The market's at all-time highs.
Sure.
Right? So here's my question. You're probably looking at your retirement savings. And you're like, holy smokes, look at that. I've got more money now than I've ever had at any other point in my life. That's probably what you're saying. Like, you look at your retirement accounts, there's probably more money there now than you've ever had.
Yeah, if you're kicking back, you're like, I've done a great job.
You're like, look at me. I'm the bomb, right? I'm the investment guru.
Yep.
Like, move over Peter Lynch.
Yes.
I'm the man or I'm the woman, depending on your gender. Here's the thing. You're likely at a stage of life where your retirement savings are the largest number they've ever been.
Right.
But I've got news for you. It turns out that the markets do not always just go up. Sometimes they go down.
Right.
So here's my question. What is your plan? Or do you have a plan to protect the values that you've worked so hard to build? Right? So I've got a great story about this. This happened several years ago.
Okay.
So I don't know if I've told this story on the radio before or not. Real life story. This was back in 2007.
Okay.
So you guys know what's going to happen in the story already because I
Yes.
said 2007, and we know what happens after. What happens after 2007, Zach?
Market crashes.
Yeah, 2008.
Yeah.
So anyway, back in 2007, so as you can tell, I've been doing this for a little while, right?
Yes.
I've been doing this 26 years now.
I was in 8th grade in 2007.
Okay, so thank you for the reminder. I was already working hard.
Yes.
2007, gentleman comes to me. Wonderful guy, right? And let's call him George.
Okay.
Not his real name. We'll call him George. George's working away, and he had come to one of our events on retirement planning because George, this was like, I want to say August of 2007.
Okay.
He was planning on retiring at the end of the year.
All right.
That was his goal. In fact, he had already let everybody in his office know he's retiring at the end of the year. He told his boss. I mean, he's already starting to work with the administrative department at his work, the HR department. Mm-hmm. He's like to set up retiring as of December 31, 2007. And when he came to see me, he, in his 401k, I mean, the markets were going up, and he had more money there than he's ever had.
Right.
In fact, he had gotten to it was like $950,000, right? And from his projections, he was just doing the math. He said, based on I'm going to be adding some money between now and the end of the year, a little bit more growth, I should be retiring with about $1 million in my 401k.
Yep.
I'm like, awesome. And I said, and when I started doing the math, I put together some planning for him, because he paid me. He's like, here, how much does it cost to put together a retirement plan? And I told him, I don't even remember how much it was at the time, But I said, I charged him, he said, here's what it is. It costs this much. He's like, okay, great. I'll hire you. I need a plan. I need help. Let's do this. So he paid me a fee, and we learned, Zach, that his $950,000 they had, right? Actually, I'm sorry, it was $960,000. Because I remember it was $960,000. I said, look, you're good. Like, you could literally make no money. Like, you could take your 401k, put it in stable value, put it in the money market, just stop taking risk. You've made it. You've won the game. You've got enough money to retire January 1st.
Yep.
And he's like, yeah, but here's the problem, Mike. I just would feel better if it were $1 million. I'm like, why is that so important to you?
Oh, my gosh.
And his answer, it just feels good.
Right.
Right? I'm like, I said, that's great, but I'm telling you, as a certified financial planner, as a fiduciary, that you are taking risk that you do not need to take. You have enough money to retire, so stop taking risk, right? It's like my grandfather told me. My grandfather, I'll never forget, my grandfather, when I was like 8 or 9 years old, I'm sitting there, he's retired, and I'm at their house, visiting the grandparents. My grandparents, chain smokers, right? He's got this 4-foot tall wooden bear that's been carved, in his house, and the bear's standing up and its arms are out and this huge ashtray in his arms, So he's sitting in his recliner with the ashtray and I'm in the other recliner. And he looked at me one time out of the blue and he says, son, remember this. You take risk with your money when you're younger so that when you're my age, you don't have to.
Right.
Well, that was George. I'm like, George, you took risk when you were younger. You're now like my grandfather. You're at the point where you don't have to take risk anymore. Stop it. Just stop. You've got enough money. You're good. You've won the game. Just don't mess this up.
Right.
Well, Mike, $1 million just feels better. So anyway, he doesn't listen to me. Right? Anyway, so we call him. We follow up with him. He's supposed to retire January 1. We followed up with him January, about mid-January, because we hadn't heard from him. Like, hey, George, hey, it's January. You're probably retired now, and you're ready to, we need to get this money restructured out of your 401k like we talked about in your plan.
Yep. He's
like, well, I actually, you know what? I didn't call you because I postponed my retirement date. Because he said, I don't know if you remember this. Well, you don't remember this probably, but starting in October, November, December, that's when the 2008 market crash started. And his count was down now to a little below 900,000.
Uh-oh. And he likes that million.
And he wants $1 million. And he's like, yeah, I'm a little below 900. And I just feel like I want to get back to the million. So I just postponed it to the end of January. I'm going to retire February 1st. And I'm doing the math. I'm like, George, you're still good here. You still have enough.
Yeah.
Stop risking your money. I mean, what if the market doesn't go back up? Oh, this is temporary.
Yeah.
By the way, it was temporary. You just didn't know how long it would be before it started going the other way. And as the year went on, every month, it'll be next month. It'll be next month. It'll be next month. By the time we got to the end of 2008, his retirement accounts, which were $960, were down to like $600,000. In fact, the market kept going down. January, February, March of 2009, he was all the way down, Zach, to $500,000.
Wow.
Before markets started turning around.
Wow.
Here's a guy that was planning on retiring January 1st, 2008. And because the markets crashed on him, he couldn't retire anymore. Nope. He ended up not being able to retire until January of 2013.
Wow.
It was like a 5-year stretch for him.
It's rough.
And I'll never forget him saying to me the first time, right, as soon as he got back, as soon as he hit $1 million, he called us, said, all right, I hit $1 million. Now, I already put it in the stable value fund. I learned my lesson. Now, I'm ready to go. When can we get together? Let's get this done. But I remember him telling us, 5 years, it wasn't just the money. That was 5 years of fishing trips with his grandson that he didn't get to take because he was working. 5 years he didn't get to spend with his granddaughter. He wanted to take her to Disney because he was working, right? I mean, it's just like worst mistake he ever made. Don't be that guy. Don't be George, right? So here's the question. You've worked your whole life. Your 401k values, probably at the highest level they've ever been. What is your plan? Do you have a plan to protect those values?
George didn't have a plan.
Yeah, he thought he did. He didn't. And that brings up Retiring Well University. So, Zach, just a couple minutes here in this segment. Why don't you talk about that a little bit?
Yeah, so this is an online class that we're going to be hosting on July 20th and 27th. It's a 2-part online class to help you answer yes to these questions that we've talked about on today's show. We're going to be diving in deep about investments, taxes, income. We're going to help get your questions answered. This is an online interactive class. We're hosting it in the Zoom platform. Next Tuesday, the first session, July 20th, 6:30 p.m. Going to run till about 8:30, maybe a little bit longer. Then the second session resumes the next week on the 27th, also at 6:30. All you have to do to sign up is you go to retiringwelluniversity.com. Again, it's retiringwelluniversity.com.
Yeah, remember this. I mean, the goal of this class, look, we want to give you the easiest path to complete financial security. And that means that you've got to answer yes. You have to have a plan to replace your income, a plan to protect your assets from market losses, a plan to protect your assets from the IRS, right?
Yep.
And one more topic that we're going to hit here in the next segment, right? So it's free. You get to hang out with me for a couple hours each night. You get to ask me all the questions you want. retiringwelluniversity.com. Again, retiringwelluniversity.com. Go there right now. Sign up. Don't go anywhere. We're going to be right back with question number 4 that you have to answer.
Hi, and thanks for checking out Retirement Today. If you like the content we share on our channel, make sure to like, comment, and subscribe so you can stay notified about all of our latest content and videos. Be sure to share all of our information with your friends and family as well. Thanks for joining us. We'll see you next time.